Okay, so we are going to have a look at the trend continuation alerts indicator for MT4 and MT5. And it's exactly as it sounds. It gives you alerts when the trend is about to continue. So it's already established. It's gone through a bit of a retracement and is going to continue. Um, Now, these trades, excuse me, can be traded in two different ways. Excuse me. They can be traded immediate entry, or they can be treated as an order block. Um, Now, the indicator will send alerts to your phone or email if you have that set up as well. So you don't have to be by your computer. Um, but obviously, it depends on which time frame you are trading on as well. Now, if you're going to treat these as an order block, they aren't really the same as a normal order block because they are a bit, because it's a retracement. The trend is already established, so they may well, you may well want to have your order block, no, your pending order expire expire sooner, maybe within 10 candles or so, something like that. And you can set the expiry here. You can click on these and change the date and the time of the expiry, and it will automatically expire if not filled. Okay, so oh dear, excuse me. Right, we're going to have a look at some trades here. We can see there was a big downtrend here, so obviously we got the signal here. Your stop loss would have been above the resistance here. Didn't get stopped out. In fact, that would have been filled if it was an order block, and then came down here again, exactly the same. Stop loss would be here, came down, and then here stop loss would be here. You might have got stopped out there depending on where your take profit was, and then here again your take profit would have been this previous structure, so that one would have been okay. In fact, no, you probably wouldn't have taken that one because your entry would have been here. Oh no, your entry would have been there. Okay, so yeah, you would have got 28 pips there on M15. Again, here, there's your take profit previous structure. And then here, let's just have a look at these in a bit more detail here. So your signal comes in at the beginning of the candle here, and it does not repaint. So you get your signal here. So you would be looking for a trade here. Now, if you entered immediately, you would have put your stop loss again below previous structure, probably here, maybe even there, but probably here. And I've already marked here. This is previous highs. Let's just go zoom out a bit. Here, no, sorry, here. That's it there. You might have actually targeted here, which would be that take profit there. So you could have either targeted here. In fact, you could even target there. Okay, so so you would have entered here, stop loss there. Let's say you were only targeting that, so you've got a 10 pip stop loss to a 50 pip there, so it's a 5-to-1. If you wanted to trade it a different way here, you could treat it as an order block. So how do you find the order block? Well, here's your signal. Look, that's a blue candle. Look for the next opposite color, which is this one here. You would place a pending buy, so a buy limit here at the top of the candle here, and it would just get filled here, and then again off you go. Using it as an order block, as you can see, your stop loss is about 9 pips as compared to entering here. Your stop loss would be about 20 pips. I'm sure I must have got that wrong before. So using it as an order block does give you a smaller stop loss and therefore a greater risk to reward, but there's also a chance that it doesn't get fulfilled and just takes off, like this one here. So if you treated it as an order block here, there's your entry, and it doesn't quite get tapped in and it just shoots off. But an immediate entry here would have been there, stop loss here at about 23 pips, and then that was the target here. So that's just over a 2-to-1. Let's just have a look. There's another one. Actually, this one's going to get out, I believe. Is it gone? There. Right, this depends on where you're going to put your target, because there's your target actually, isn't it? So you look at all this resistance here, resistance and support here. So that probably would have been your target, and you would have just had a one candle trade here. Stop loss would have been about 14 pips, and you would have made, well, it would have been a 1-to-1 roughly. Personally, I wouldn't take that because I like them to be at least 3-to-1. Then we have this one here, and if you'd had your stop loss there, okay, there's previous structure. Again, it did go to previous structure, but that's a small trade and not enough for me to take. This one here, let's have a look, zoom out. Have we got, where were we? This one, isn't it? Yeah, this one. Have we got, let's just mark that, previous structure from above this line here. Okay, so targets could be, you see there's some here and it has a bit of a wobble around here, so you probably would take a target there. Okay, so you would enter here. Again, if you used an order block for this red candle here, then it doesn't get tapped in. But this one here, as an immediate entry, gives you a 15 pip stop loss. Target was there for 24, 1.5. And again, here you can see some nice trades coming down to targeting here. Okay, so those are the trades, and that's how to take them. Again, some nice trades down here, come down all the way down to there, etc. So please let me know if you have any questions.